Welcome to the U.S. Bank Lounge here at Money 2020 in Las Vegas. I'm Steve Johnson, and I'll be hosting a series that we're calling The Future of Finance. And to kick off this series, there's really no better way to do it than to have the fairly freshly minted CEO of U.S. Bank, Gunjan Kedia. Thank you, Gunjan, for coming and being with us.
Well, thank you for doing this, Steve. It's a pleasure to be here.
And this is really exciting. You just got off of the main stage for, the kickoff keynote and fireside. And I know that a lot of the talk really started around this idea of this evolution that we're going through. And that's one of the things that we're talking about throughout all of these series. Over your time, your 30 years of working in this system, you talked a little bit about what you saw as being big changes. What was it you told the audience in terms of the macro change, but then also what has been the big change or evolution for U.S. Bank in the almost decade you've been here?
Well, two big questions. So let me unpack that. So first is what's happening with our industry and why today is a very interesting time to be in this industry. So Steve, I'll just give you a little history lesson. Just going back 25 years. A very seminal piece of legislature was passed called the Gramm-Leach-Bliley Act, and that allowed banks to enter adjacent products. And in the decades that followed, banks amassed significant market share of many other businesses that were not core banking. For example, today, capital markets and investment banking are almost all in the banking system. Asset management, credit cards, investment services, custody, payments are all businesses that banks have made real inroads in. A shift came in 2008 with the financial crisis. A new set of regulation called Dodd-Frank was passed that made it more challenging for banks to be in certain businesses because of new capital requirements. And it shifted the industry in a meaningful way. Those two milestones are important because of what's happening today, which is yet another re-examination of our regulatory framework. And no doubt, much like the last two ones, we'll see a shift in the industry structure and the industry behavior. So very important change. The second track I will follow is technology. Obviously, a big driver of change in any industry, and especially the financial services industry. So what else was happening in 2000 when we were thinking of regulatory changes? Y2K and the internet. At that point, nobody had imagined what consumer behavior would evolve to and how business models would change with the internet. Then came mobile, then came cloud. Today, we are sitting on the precipice of AI and stable coins, two very big shocks to the financial services industry. So exciting times. Regulation and technology, always the big drivers of change. Now you asked the question of U.S. Bank.
Yeah, and then zoom in now in that last decade and how all of that and how U.S. Bank has been evolving through these things in the last decade.
So I'll tell you personally, when I got here in 2016, U.S. Bank had just embarked on its digital-first journey. And what was underpinning that was 10 years of the iPhone having been introduced to the world. And while banks were busy with the financial crisis, the consumer had moved on to a level of convenience, a level of access and availability that was far outpacing banks' capabilities. In fact, Steve, I'll tell you, I had a friend who says to me that it's easier for me to order books than to get access to my bank account. And it was true. So 2016 and 17, our then CEO, Andy, had just stepped into his position, and we started this journey of digital first. So I fast forward to where we are. And along the way, as you know, we've had COVID, we've had a couple of bank failures. So it has not been a linear path. But if I was to just give you an aerial view, we are at a point when we are very strong in our product sets digitally. Our people are digitally first. But we are also very, very cognizant of the heart of the bank and the trust that underpins our clients. So US Bank's journey has been one of digital and human connections.
And, building on that, when you talk about trust, that's a very important piece of this, especially when you're talking about people's assets, which is really what you're managing. What's the profound shift that you're seeing right now in financial services that you have to do? What's the primary element you have to keep front and center so that the customer stays front and center, as you have noted before?
Yeah. Well, just think about yourself and what money means to you. Just going to let you think about that for a second.
I can do that.
It's deeply personal. And money is not a destination in itself, but it's your hopes, your dreams, your fear. Most people think of money as either security or independence or an event or a trip they want to take or a daughter who's getting married or a pair of jeans you want to buy. So what you must remember is when you safeguard somebody's money, in some way you're nurturing their hopes and dreams and their lives. So if you keep that in mind and you think about the role of a bank, which is really to prudently infuse capital into the communities and the people we serve so we can propel their ideas and their dreams. So the matter of trust is a very important element. Now, how do you get that? We've been in business 163 years now. On my wall hangs the charter, which is the second oldest banking charter in the country, because it reminds you of what it takes to be a 163-year company. You must never break their trust. So we invest in safety and security from a cybersecurity, resilience, systems availability, keeping their identities safe, their data safe, making their records, their money available to them 24/7 as needed, letting them access it, transact it, and then giving them advice on how to grow it. So there's a lot to unpack here on what it takes to keep clients at the center, but these are all the decisions that surround keeping clients at the center.
I like that you brought up that historical paperwork, because one of the questions you got on stage, and one that I want to explore here, is the friction that could be there between traditional banks and emerging technologies and how they operate together. I mean, obviously, we're finding ways to be able to make that work, to be less tension between. But what's the primary tension? What is the thing you need to be focused on when you're talking about traditional banking models, emerging technologies, and making them work easily?
Well, as you know, from the time of history, a new technology always displaces existing definitions of human jobs. And that's the fear. And it's very real. I do not want to be dismissive. I know the anxiety that is in our communities, in our workforce, around displacement of jobs with AI. It reminds me of the time when ATMs were first being rolled out, and there was newspaper articles after newspaper articles that said that's the death of the branch bankers, or it's the end of branches. And what happened instead was it was not the end of anything, but the jobs evolved. So what we need to make sure is to be very straightforward with people on what kind of jobs may actually evolve away, because AI lets you do things that you didn't think were possible. But what are the new jobs that it will also create? So I'll give you a sense. When the internet came and people said, oh my God, now you're not going to have anybody coming into the branches. Well, what happened was people started checking their balances 100 times a day instead of once a week. And what they came into the branch was for different reasons. So that's the tension. Some of it is real. Some of it is anxiety that people have because they don't know what's coming in terms of the new jobs that will be created.
One of our later sessions, we're going to be talking about access to capital and how we help consumers with that to do it more quickly. I want to talk about that in terms of digital, blockchain, these other access points that are growing. US Bank being able to be in a position to take advantage of that. I would like to talk about that with a sheen of regulation, because this is all so very new still. And regulatory ebb and flow, we're kind of in an ebb right now when it comes to that. A flow might be coming. How do you see US Bank taking advantage of this and taking advantage of this for the benefit of the end user?
Our industry's regulation is intended to safeguard people who don't have the ability to truly do it for themselves. And as such, it's a good thing. The intention and the alignment between the industry and our elected officials is quite strong there. We all want a safe and stable banking system. And the debate is just how. The AI driven regulatory debate is very much around what could happen with the data and false advice, with hallucinating models, with inadvertent disclosure of individual data, because it's new and we haven't figured some of those guardrails out, and rapidly figuring them out as we speak. So how do you make sure that you're doing it in a responsible way but not in a complacent way is our thinking. The second new big discussion around our industry is cryptocurrency and stablecoin. And there it's both a matter of the impact to an individual consumer, but also what it does to the system. So very new discussions, very interesting discussions, and no doubt will shape the industry in the years to come.
We're in kind of a fishbowl here, the studio kind of plopped into the middle of the floor at Money 2020. And you can see a lot of U.S. Bank folks outside. There are a lot of people involved in what's going on here. And it reminds me of, as we're doing more technologies, human element. Technology, human element. I was at a mortgage data event in London, and on the panel there were two different, well, not opposing, but different angles. One guy was like, yeah, AI. Oh, this is the best thing, man. It's going to loosen us up and we could do more with less and all of that other stuff. And one guy said, yeah, but what we like at our organization is there are a lot of people involved still, and there's still humans, and people will interact with humans. What's the balance of investment from U.S. Bank? Noting your traditional background, noting that you have humans creating the tools and humans creating the technologies, and how do you balance that between, all right, how far are we going this direction? How human are we staying?
Yeah. Well, first, hi to all my US Bank team members that are listening. It is a fishbowl, and it's so much energy coming through from the floor inside the fishbowl. It's wonderful to be here. So, Steve, it's an and I am very convinced that the trade-off is a little bit of a false trade-off if you just step back strategically. The contributions of technology and the convenience and accessibility they provide also translate to the productivity they offer to our human colleagues. And that productivity allows us to spend just a little bit of extra time with our clients, a little bit of more energy around the unique things that they need from human beings. So I think of it as, are we investing in our human capabilities or our digital capabilities? It's like, how are the digital capabilities able to make our colleagues that much more productive, insightful? So let me give you a few examples. So you know how real this is. The AI models that we have in our contact center hear the customer's question. And it used to be that our contact center colleagues would hear it, they would make conversation while they were looking for the specific documents or the specific insight that might be able to help the client on that question. Now, before the end of the conversation, our AI models have already found for them the two documents that are relevant. So think about the quality of your support to a particular person calling in, human and digital. Let's think of another example here. We have so many, because we are a 163-year-old organization. In our technology systems, we have code written by people who are not with us anymore. And it used to be, it would take a lot of time to document that, understand sort of the logic of the code as we were enhancing it. Today, the AI models can actually look at the legacy code and help a new coder build capabilities faster, human and digital. We have fraud, where the quality of the fraud attacks have become better because of AI models. So we are countering them with our own AI models that can detect the fraud better, and it helps us save identities and keep our clients transaction secure. So human and digital. So that's the way to think about it, is where can technology truly enhance your ability?
You have an engineering degree, and then you went and got your MBA. So, managing a business and people, I like to work with technology and electronics. Is there one of those degrees that happens to keep you up at night more than the other as you go through these changes, the tech side of all these things, or the managing the business human side of these things?
Not really, but the combination is powerful, is what I would say. The engineering training is more about systems thinking. So you understand causality, you understand, how one thing impacts another. And because we are such an interconnected banking, financial services ecosystem with a lot of emerging players, a lot of traditional players, that type of thinking and the curiosity around the power of technology, where you genuinely enjoy thinking about what might be the way to bring the power to your customers, is a very good foundation to have. And you don't need to study engineering to do it. You can be curious about it. There are lots of people who are who lean in very much into sort of changing trends, into systems thinking. But to be a leader, you also have to take all of these trends and translate it ultimately to the benefit of the people who you are nurturing, who you are serving. And that mindset is very important. So I would say, again, it's a little bit of a combination of both that really helps you build a great company forever, serve clients well, and keep front-footed.
And this is a strange time because, this is a unique time. 5 generations in the workforce at any given moment, 5 expectations of what work looks like, how you do that. What's that like, juggling those 5 bowling balls lit on fire to keep everybody happy and engaged?
It's really beautiful, actually. I wouldn't have it any other way. If I could even design it, because our clients are 5 generations and more. What is so beautiful about having these generations is that you can build on the value system and the unique strengths of each generation in a team setting. And we do try to build a culture where there is true curiosity about how someone else might think about an issue. Because if you do that at scale, you get really good decisions within your company. So we have people who have had 45, 50-year careers with US Bank. I know them because when someone achieves a milestone of that magnitude, I always write them a personal note to thank them for their loyalty and their service. You get insights that come from living through business cycles. You know the caution that you must have in good times, because in bad times you appreciate the caution. On the other end of the spectrum, you have people who are driven by the art of the possible and not constraining themselves on something that might have gone sideways on an issue 20, 30 years back. So they bring innovation. They bring effortless ease with diversity. They bring effortless comfort with user experiences and technology. So they make us better. So it's really beautiful to have 5 generations. It makes it a unique management challenge for our 10,000 plus managers. Add to that remote work, add to that people, we are in so many locations, so many cultures, so many beliefs, and it makes for a very rich tapestry to be part of.
Before I let you go, one last question. What are you hoping to get out of, for US Bank, what are you hoping to get out of your time here on the ground at Money 2020?
Well, it's mind expanding, first of all, to just see the names around the floor and what they do and how much they're pushing the boundaries. So I expect that I will leave these 2 days being a smarter person. I'm probably going to leave these 2 days feeling a sense of urgency and energy to explore what we might bring to our business from here. And I'm very proud of our own team. The booth looks great. We are a very large player in payments. Just the statistics that we see, almost $1 trillion in transactions. And to see us take a rightful place in this particular sort of world of money is wonderful to see. I feel proud. I feel energized.
Gunjan Kedia, CEO, thank you very much for being our first guest on Future Finance Series. Have a very good time the rest of your moments here in Las Vegas.
Thank you, Steve. Thank you for the conversation. It's a pleasure to be here with you.
And thank you for joining us. And make sure you come visit back to us here at the U.S. Bank Lounge at Money 2020. We've got a whole series coming up.